Well, g'day there traders and friends right around the world. Thanks for joining me on this Tuesday afternoon market recap. I have potentially three pieces of market analysis or three different charts which I want to show you as at this Tuesday afternoon after market close. The first chart I want to speak about is the Dow Jones Industrial Average, probably the most insignificant of the three. But again, hey, I'll just recap the daily price action. We closed down just over 40 points today. We're seeing what we call another spinning top type of candle. So we saw one on the Monday. Again, we've got one on the Tuesday. They're not the strongest reversal types of signals, but again, it is reflecting indecision and a little bit of mixed sentiment as the markets again push back up and retest the 200 simple moving average for the first time since the breakdown in really July 2015. So again, I'm watching this market very much so very closely and just seeing whether or not we're going to see a definitive breakdown and sell off below around 17,478. If that happens, there's a very good chance that at a minimum, we are going to pop our heads back down to 16,500 at a minimum, retest this old resistance as new support and either break below that, break below the August lows, or see some form of a bounce off from and around the 16,500 level. Paying very close attention to the Dow Jones Industrial Average, we haven't seen a definitive confirmational type of move yet, but the market itself, for at least this week, is looking as though it's setting up some form of a correction or the beginning of a little bit of a resistance level as we expect at this 200 simple moving average. And again, I'm just very excited to see how this market trades as we move into Wednesday, Thursday, and round out the week on Friday's trading session. The other two major markets which I want to speak about, or one particular market, is definitely the Dow Jones Transportation Average. Let me just put a dollar sign in front of the ticker symbol and bring it up for you, because we're seeing again very much so a very bearish reversal candlestick which is just set up as at the close on Tuesday. We've been contending with this downward trend line, as you can see on my screen, since February 2015, and since breaking the lows in May, we've been definitively setting up a bearish trend. And as you can see this trend line coming down through my screen. It was looking as though late last week that we were going to see a mad dash back up to the 200 simple moving average. And again, this is a declining 200 simple moving average, very much so a very strong resistance area. Instead, today we saw the Dow Jones Transports sell off just over 215 points. So a major bearish day, some decent sell volume coming into the transport. So as it stands, again, the transports have flicked back into some form of a bearish setup. And we've had this 7,967 sort of momentum trigger on this chart since we established this little support bracket over here. So it looks as though the transports are going to break this level, and it is going to work as sort of a forecaster, at least for the other three equity markets, the Dow Jones, the S&P, and the NASDAQ, if in fact all three of the other markets are going to find resistance at their 200 simple moving average. So pay very close attention to the transports, because the transports have been an excellent leading indicator, or leading market, which is really pushed or moved the other three major US markets in the transports direction. And we're starting to see once again the major sell signals where we should see a reversal. It looks as though again we're setting up some form of a little double top. And on top of that, we are also very overbought. If you have a look on the Stokes, the RSI has already turned down, and the MACD looks as though it's going to give us a very nice cross very soon. So pay attention to the Dow Jones Transportation Average. Outside of the industrials and the transports, as at this Tuesday afternoon, one major stock from our pro list has broken macro support. It's quite interesting because I was on the phone to a friend yesterday, or another trader, and I was talking to him about how this looked like a bear flag and how I personally was very much so tempted to bring up my sell trigger up to about 142, because that would be the break of this bear flag to the downside. Well, you can see what happened to IBM during Tuesday's trading session. We closed down $5.80. Have a look at the sell volume coming into IBM, a major sell wick for IBM. If I zoom in on the weekly chart, if you pay attention to about this 140 area where we're currently trading, if we break this area, we've got targets all the way down at $127 a share. It may be a little bit of a wild ride. It may happen very quickly, or it may happen over maybe a week or two. But at the moment, and as at the close on Tuesday, we have closed below this macro support, which is set up since August, and it's looking like an absolutely fantastic trade. Our entry was 139.06. Looks like we are going to see some form of a breakdown. Again, how it happens or how that unfolds is a little bit up to guesswork, or a little bit of hyperbole at this state. But it is looking exceptionally bearish. So if you're looking at trades for this week and it sits with the market analysis, IBM is a great little trade. If you're not in it, you can set up a little trade below about 136.93, just below the wick of Tuesday's candle. The only problem at the moment that I have with this trade is risk. And I understand that there's a really good reward. If we have a look at the chart, 139 all the way down to 127, that's about $12 of intrinsic value into puts if it makes that move. But at the moment, if I zoom in on the detail, you have to ask yourself the question, where does my stop need to go on this trade? And as a swing trader, this is where it gets a little bit difficult because the stop itself needs to be positioned at about 143.83. So if you got in at 139.06, that's okay. That's fantastic. You've got about $4 of risk, a little bit over $4 actually, up to our first stop here. But what we'll do is we'll monitor the daily candles as they unfold on Wednesday and specifically Thursday as well. And what may be the case is that if this continues to the downside, we may be able to bring down our stop to a lower level, maybe even as low as about 141, which really gives us only about $2 of risk to make that $12 move all the way down to 127. So at the moment, this is where trade management comes in, and it's all about managing the trade. At the moment, I put my stop just above the high of Tuesday's candle, but I'm very much so excited about the future moves in IBM, which we may see later this week, especially if the markets themselves see some form of a significant sell candle or very much so a dark candle, either on Wednesday, Thursday, or Friday. It would definitely add to IBM sort of woes at this particular moment. So pay attention to IBM, a fantastic breakdown just occurring, and it's taken about 2.5 months for it to actually set up, or 2 months since we saw the breakdown in late August. So pay attention to IBM as well. Outside of that, I've covered everything I wanted to cover on Tuesday. It is some form of a shortened Tuesday market recap, but the markets themselves, we are still very much neutral. We haven't got into any directional trades on the diamonds or the Qs or the SPYs. We're still waiting, but we've got 2 consecutive days of indecision. Sentiment itself is definitely starting to shift up around this 200. It's now a question of, well, is this going to be a larger type of correction which ultimately breaks these September lows, or are we going to see some form of a back test, again, maybe as low as 16,500, and then the market establishes itself for another push on higher into 2015 or to really close out 2015. At the moment, I'm not sure which one it will be, but at the moment, again, based on the location of the chart itself, this is the perfect location for the market at least to see a correction, to see a pullback, and a really good opportunity to start positioning yourself short to capture some of this correctional move, whether or not it is a major trend reversal or in fact that back test down here around 16,500. I will bring that to your attention. But again, pay attention to the transports. Transports are looking very much so weak. And again, on top of that, IBM has had potentially a very important breakdown, technically speaking, as at the close on Tuesday, which I wanted to bring to your attention. So have a fantastic evening. Have a fantastic Wednesday. If you have any questions, email me, success@pivotpoint-trading.com. All the best traders and friends right around the world. I'll see you soon, most likely tomorrow for another market update. And I'll pay attention. I'll bring you the updates on IBM and the transports and, of course, the industrials when they continue in our direction. All the best traders. I'll see you soon. It's James signing off on behalf of Pivot Point Trading. Goodbye.